Hi guys, and welcome to episode 11 already of the $500 to $10,000 trading challenge. As you guys know, we just switched to Woo as our partner exchange for this trading challenge, and we are about to enter our very first trade on that exchange, which is a Litecoin long. What we can see over here, last week we know we longed Litecoin over here, but I'm looking for a re-entry and another long position. We can see a beautiful range, pivot number 1, pivot number 2, and then pivot number 3 to determine a high probability range. Guys, look at the respect of the mid-range over here, over here, over here, and over here. Beautiful respect of the mid-range. And we can see that we've been deviating above the range high, deviating below the range low, another small deviation below the range low. But guys, you have to realize that the daily trend is up, 4-hour trend is up as well. And as long as the daily and 4-hour trend are up and we are above the mid-range level over here, price remains bullish. Now we can see that we have a fake break of structure over here, fake break of structure over here. If you don't know about fake and valid break of structures yet, guys, you have to pay attention, because I've been explaining so many times. Now, these fake break of structures are inducing people into opening up longs, and they're putting themselves beneath the lows over here. So basically, these fake break of structures are engineering liquidity to the downside. Now, the liquidity is exactly aligning with, indeed, our mid-range. Besides the mid-range, we also have the 200 EMA and the 200 moving average exactly aligning with the mid-range level on the 4-hourly time frame. The 200 moving average and the 200 EMA estimated moving average on the 4-hourly time frame are pivotal EMAs for altcoins. They're exactly aligning with the mid-range. Also, if we take the fixed range volume profile of this range, what can we see? The point of control exactly aligning with the mid-range area. Besides that, I mapped out a bullish order block over here, as you can see. This bullish order block on the 4-hourly time frame is a high probability order block. Why? Because it swept sells liquidity, it initiated an impulse that shifted structure over here. We have that beautiful liquidity inducement above that bullish order block, right? And we can also see that we have the draw liquidity towards the opposite side of the order block with these highs that are building up over here. So a beautiful high probability order block. And we cannot forget about that bullish fair value gap over here, that breakaway gap that aligns above the order block to make it a high probability one. So right now for Litecoin, I'm hoping for a quick flush into the mid-range area to find support there before a reversal towards the upside. That's the plan. I've set my limit orders. We are risking approximately $18.45 on the first entry and $11.17 on the second entry. Over here, guys, you can see the Woo exchange where we have filled in the first entry, as you can see, with the green line over here, second entry, and you can also already see the stop loss. Beautiful, very friendly user interface. I really like it so far. Over here you can see the first entry, and over here you can see the second entry, and you can already see 2 entries for our other long trade that we are about to enter, which is a long trade on Near protocol. So as you guys can see, I filled in 2 limit long entries for Near as well. We have a beautiful range, pivot 1, pivot 2, pivot 3, and pivot number 4, giving us a high probability range once again. Over here, if we zoom in, we can see that we have seen a tiny little sweep over here of this previous low, right? Which is enough to take those stops in this case over here. Why? Because the true liquidity, guys, wasn't resting beneath this low. It was actually resting beneath this low and beneath this low. Why? Because we saw this huge pump to the upside, resulting in this fake break of structure. People long either the pump or they long the pullback, and they're greedy creatures. Retail traders are greedy creatures, so they use closer lows or a tighter stop loss for a higher RR trade. So they use these 2 lows to cover their stop. We took out those stops, right? When we then zoom into the 1-hourly time frame, we can see that we have seen a local liquidity sweep as well, resulted in a break of structure to the upside. And then after forming the break of structure to the upside, we form a higher low and then a higher high. This higher high, guys, what are we looking at? You guys should know by now. Fake break of structure potentially. What is this doing? It is opening up long positions over here by retail traders or on the pullback. Where are these people going to put their stop loss? They're going to put their stop loss beneath this low over here, which is making this low a valid inducement for this entire order block over here. So we have this hour 1 breaker block over here, aligning in that fair value gap. And then beneath that, we have this hour 1 bullish order block as well. Why is this a bullish order block? Once again, swept liquidity, fair value gap above the order block, inducement above the order block, initiated an impulse that shifted structure, and it is a drawn liquidity towards the opposite side of the order block with all of these unswept highs over here. So right now I'm looking for some kind of a, let's remove the magnet for a second, A, B, C correction, right? An expansion, flat correction into our limit long orders before a reversal towards the upside. That's the plan for NEAR. If we look at a picture volume profile over here on NEAR, we can also see that it deviated above the value area high, right? Then it starts testing the value area low. This is not a true deviation of the value area low, but right now we can maybe start a proper deviation over here beneath the value area low, reclaim it and send it towards the value area high again. So I think the fixed volume profile is potentially setting up nice for another failed auction. High probability, beautiful long setup. I was already long on NEAR, but I had to close it because we were switching exchanges, and I think this one might even be aligning a little cleaner over here with some more confirmation. So let's see if Litecoin and NEAR can get filled, and other altcoins are potentially bottoming out as well, but I need some more confirmation on a 4-hourly time frame. If I get that confirmation, I will be looking to add 1 or 2 more long positions. As you can see, NEAR started pumping without us, so I have removed the entries for NEAR. But guys, we are about to enter a brand new long position on Rune. We are close to getting filled on Rune right here. We can see that on the higher time frame, guys. Rune is simply retesting the previous range high of this massive accumulation range with beautiful pivots, as we can see over here, forming that high probability high time frame range. After the breakout, we can see that the price retested the range high once, twice, gave 1 bounce, 2 bounces. We know that these perfect retests, guys, they cannot be trusted. They usually don't hold. So what does price do? Eventually it comes back and it sweeps the liquidity that is resting beneath those perfect retests. If we then analyze the local price action, we can see that we saw a fake break of structure over here. Check. We love those fake break of structures because they engineer liquidity beneath a local low over here. We mitigated liquidity pool, so we go for the stops of the people that long on the wrong confirmation, right? I discussed this on Twitch, I discussed this in the YouTube video, on the wrong confirmation, and that local liquidity sweep over here is resulting in a strong bounce. That bounce is reclaiming that pivotal range high level, which is the first sign of strength, and on the 15-minute it is resulting in a valid break of structure to the upside over here, which is my second trigger. So first entry, pretty aggressive. Second entry is a lot lower down at this bullish, high probability M15 order block. And eventually, this is a bit of aggressive trade, right? Usually I would wait for the hour 4 confirmation, which is where we currently have our first take profit target. But I'm anticipating this deviation over here to be completed soon. And then I'm anticipating a push higher for Rune from here. Also, the on-chain data on Rune is looking pretty good. Open interest was decreasing on this move to the downside, which means that longs were taking profit. Spot has not been increasing to the downside, which I will show you guys right now. We can see that Rune was decreasing, the CVD indicator for futures were decreasing, but the spot CVD indicator was holding very strong at the top over here. Now more locally, what we can see as well on the 15-minute time frame is that CVD was forming lower lows. CVD was forming lower lows and lower lows, while open interest was increasing over here, right? While spot was actually forming a slight higher low. So also the on-chain data on Rune is in our favor for a potential long position. So yes, it's an aggressive long position. We are risking $25 on this long position, but we've removed the orders for NEAR, so we can take a bit of a risk over here. So right now, having stink bids for Litecoin in case we get a bigger flush, and if my bias for the market on altcoins and for Rune is correct, then hopefully we get filled to Rune and hopefully we pump from there. We are off to a decent start this week because Rune is currently decently pumping towards the upside, and as you guys can see over here is that I've tightened my stop loss to this previous low over here. Why is that? It is because on a lower time frame we are shifting structure. As you guys can see, I can simply chart on the Woo exchange, which is pretty nice. We have shifted structure to the upside on a 15-minute time frame, so I don't want to go below this local low over here anymore, because in my opinion that would be pretty bearish. So I would like to see continuation on Rune from here, and I've also set my first take profit target around $7 $1.94, which is where I will close 50% of WU for an approximately $18 gain on the account. I've removed the Litecoin orders. Why? I have removed the Litecoin orders because it already reached my first buy side liquidity target over here and it rejected the range high. So in my opinion, my objective for Litecoin, my target for Litecoin isn't valid anymore. So why, if the price is going to test this area, would it reverse towards the upside as there's no liquidity to be taken, and if we have already tested and rejected the range high, which is why I removed the Litecoin orders. Unfortunately, the near trade that we had to close because we were switching exchanges to WU is pumping pretty nice, but fortunately for us, we are still holding this one on the main account. So after a good start this week, and I'm about to add a potential INJ long. I wasn't kidding when I said that I am about to add an INJ long. And the next day, guys, an INJ was still following my plan, so I decided to add a long on INJ as well. What we can see on the chart over here is a potential hour 4 reversal structure, because we analyze a local trend. We can see that we take out this low, that brings us to this high, then we form a lower high, then we form a lower low, and then we form a higher high. We open and close candles above that significant high that brings us to that low. But we know that a market structure break simply isn't enough. We need to mitigate some kind of important liquidity pool and deviate from an important range level. What we see is that we had huge liquidity resting beneath these equal lows over here and beneath this low as well. Now, why was there important liquidity resting there? It is because of these fake breakouts that we see over here. And because of these fake breakouts and these fake breakout structures, people open up breakout long positions with their stop loss over here targeting price discovery, or a pullback long position with their stop loss beneath these equal lows or this low over here. Alright, so we mitigate the important liquidity pool, we deviate beneath this very, very pivotal quarterly level, because look at the respect of this quarterly level, guys. It's beautiful. Support, huge support, resistance, support, 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 right? And over here you can see if we extend it to the left, it was resistance as well. So a very pivotal quarterly level that we deviate below, very important liquidity pool that we mitigate, and we break structure on the 4-hourly time frame, while the daily trend is still strongly trending towards the upside, no shift detected at all. Now on the lower time frame for the execution for this trade, we once again enter the lower time frame liquidity pool that was resting beneath these equal lows. Why was the liquidity resting there? Fake break of structure, fake break of structure. People open up longs with their stop over here. That's where the liquidity was resting. That's where I have my first aggressive entry point up on this low time frame support level. Second entry is at the top of this quarterly level, where we also have this hour 1 unicorn setup. Hour 1 breaker block aligning with this bullish hour 1 for value gap. Hour 1 unicorn setup for our second entry point in case that it gets filled. And then our third entry, guys, is a high probability hour 4 order block. Why is it high probability? Because it sweeps liquidity over here while the order block is being formed. It has a bullish high probability fair value gap aligning right above the order block over here, which is the second requirement. It initiates an impulse over here that shifts structure, which is a requirement. It is a draw liquidity towards the opposite side of the order block, which is a requirement, with this high around the mid-range and this high around the range high. The only thing that is missing above this order block is an inducement to make this order block 10 out of 10. But that doesn't mean that it isn't high probability enough for us to use it as a third DCA entry. Rune is still running in approximately a $12 profit. And also, guys, the first entry on INJ just got hit. I filled in the second and third entry over here on INJ as well. And I've set my take profit and stop loss on Rune, obviously, as well. Now let's see if INJ is going to hit the second and third entry as well. Let's see if Rune is hopefully going to pump to its first take profit target, or is going to stop us out at break even. Both are fine, but obviously we do prefer the take profit target. Ciao, ciao.